Lisa is the online tool for testing, analyzing, and most importantly, realigning life insurance expectations. With the introduction of flexible premium universal life policies in the late 70s, the idea of pay what you want when you want became a major selling point. No longer was there a promise of performance, but rather a projection of performance. Life insurance illustrations became the mainstay of demonstrating the projections and setting consumer expectations. This led to 45 years of an illustration race to the bottom. Who can demonstrate with the illustration the lowest projected price? More recently, the competition has shifted towards tax-free income. Who can demonstrate with the illustration the greatest projected income? The problem is that these illustrated projections use a constant rate for the accumulation of policy values, whereas the policy itself may be tied to interest rates, or in the case of indexed or variable universal life, stocks or bonds. And this has caused a disconnect between the illustrated projection and reality. This misalignment is a ticking time bomb, and Lisa is the tool to diffuse it. Our expectations of a policy's performance are set by the illustration projections. For instance, what is the expected cost to me? How much are the premiums and for how long do I have to pay? What's the benefit I'm expecting? Is it tax-free income? Of how much and for how long? Or is it death benefit that will actually be there when I die? How will the policy accumulate cash value? At a constant rate or a volatile rate? If a volatile rate, how volatile? What is the risk-return trade-off and how tolerant am I of this risk? And finally, and most importantly, how certain can I be that the policy will sustain long enough for the expected benefits to be realized? Lisa gives us the answer: probability of success. Lisa is the online tool for realigning life insurance illustration expectations. Lisa tests the reliability of the costs, benefits, and accumulation assumptions that the illustrations lead us to expect. Let me show you how Lisa works in action. Let's look at a very common life insurance policy build structured for the maximum amount of tax-free income. 45-year-old non-smoking male is looking at an illustration with $25,000 of premiums for 20 years. He then expects to get $78,000 of tax-free income for the next 20 years. The illustration shows that the policy will sustain to age 100 and beyond. This is well past the average life expectancy for his cohort of age 88. Run at the maximum allowable constant rate of 6.3%, the illustration does not fail or lapse, and thus he expects reliability. The implication is certainty, a 100% probability of success. However, the policy's accumulation or crediting methodology is tied to the stock market. It is indexed to the S&P 500 with a 10% cap and a 0% floor. When run with Lisa using volatile rates instead of the constant rate, we see that out of 1,000 possible trials, many of them fail. In fact, 960 out of 1,000 trials fail, even before the average life expectancy. The Lisa analysis shows a disastrous probability of success of 4%. What can we do to improve this? Well, we can lower the expected benefit, in this case from 78,000 to 54,000. Now we have only 100 failures out of the 1,000 trials. And we've increased the probability of success to 90%. We have realigned the projected values for a stronger expectation of reliability. There's a lot more that Lisa can do, but I'll just briefly touch on some. For instance, we can look at death benefit probability. A policy designed for a death benefit expectation needs to be tested for the probability of achieving that desired death benefit. In this case, the target death benefit is $1 million, and we are testing the success probability at age 95. Only 180 trials resulted in a death benefit at or greater than the target death benefit, and Lisa shows us this 18% probability of success. We also have a premium finance probability analysis, where you can study the impact of leveraging volatility and estimate future collateral obligation. There is also an early termination analysis. Here you can review the impact of a policy lapse or surrender and the net cash position, including estimated taxes due. This is just a sampling of the insights and functionality of Lisa. Lisa is the only commercially available online tool for testing, analyzing, and most importantly, realigning life insurance expectations. Thank you.